Very busy show today. Let's get right to it and tell you about it. We have one of these companies that last week was designated to be one of the registrars for internet domain names, register.com. We'll talk to the CEO of that company. What does this mean for a small company now to be a part of this big-time business of signing up names on the internet? We'll talk about that. The CEO of At Home is with us. Talk about being in a conflict. They have on their board of directors AT&T and Comcast, both locked in mortal combat over Media One. We'll get his take on the cable modem industry and its future. And also a new wrinkle in our day trading segment that we do each Monday. We're going to start taking your phone calls now, questions that you have about day trading. The co-author of the Electronic Day Trader's Secrets will be along to take those questions coming up a little bit. Very busy program. We'll see you at the top of the hour.
Welcome back from Baraboo.
Thank you very much.
All right, Bill Griffith. Our next guest has both stocks and bonds in his portfolio. So how's he allocating the assets in this market climate? Here to discuss his investment outlook is Roger Debard. He manages the Hotchkiss and Wiley Balanced Fund. He's live from our Midtown Manhattan Bureau. Nice to have you with us.
Thank you.
Where do you stand right now? What's your asset allocation?
We've got 49% in stocks and 51% in intermediate investment grade bonds.
Have you changed that recently? You went more aggressively into equities, didn't you?
Well, we used the languishing market in the first part of 1999 to build our position in value-oriented stocks.
Why did you make the change?
Because the prices of most of the stock market were flat to down in the first part of 1999, whereas the NASDAQ stocks, which you see following through, in fact, today, were accelerating significantly. I've never seen a disparity in valuation between large cap growth stocks and so-called value stocks in about the 34 years that I've been doing this.
Do you have no desire to hold any cash at all here?
Not much, no. We think that there's plenty of liquidity in treasuries in the short intermediate sector of that market, and considerably more investment opportunity in corporates, mortgage securities, and asset backs.
Let's take a look at some of the stocks you like here and run through why.
Thursday, time for a look at one of our power portfolios. This week's fund manager emphasizes risk management by splitting his portfolio equally between stocks and bonds because he's managing a balanced fund. Roger Debard manages over $109 million in the Hotchkiss and Wiley Balanced Fund. He targets large cap stocks with dividend yields greater than the S&P 500's average yield, and the fund is currently up about 5% year to date. He joins us with some of his top picks, and Roger and I go way back. It's good to see you. It's been a while.
Good to see you, Bill.
And with this volatility, you're the kind of fund manager that's trying to find some, as I said before the break, a little stability in this period of volatility. How do you do that? What do you look for?
Well, we have about 41% in common stocks, and in almost any market environment, we're able to find stocks that do represent what we view as unrecognized value. And today we see it in some consumer durables, companies such as Ford, and consumer staple stocks, utilities today, high-quality utilities, high-quality finance stocks.
Well, let's be specific then. You mentioned Ford. What about that company do you feel becomes a kind of a safe haven, if you will?
Well, a safe haven from the standpoint that they've made such dramatic changes in the operations of the company over the years. They've reduced their expenses. They're using the Ford 150 platform for trucks, the new Expedition, the Mercury Navigator. They were early on the trend of utility vehicles. So this company is primarily domestic, but they're also doing a good job in Europe. Very little exposure to Asia, for example.
I mean, Europe is really their big exposure internationally, more so than Asia.
Has a yield of about 3.2% dividend yield, and selling at about a 10-to-1 price-earnings ratio. So it's a safe haven stock from the standpoint of value.
Okay. One of those utilities you talked about, Illinova.
Well, that's interesting because again, it's not exposed to foreign external events.
Right.
Yielding about 4.5%, paying out about 60% of their dividends, so they're reinvesting money in their book value, having cash flow to spend on their operations, to maybe make acquisitions. They themselves would be a prospect for acquisitions. There's a lot of consolidation going on in the utility business today.
Well, that's a pretty good yield too. You think that's going to last?
Well, compared to the 1.3% for the S&P 500, yes.
Yeah. Weyerhaeuser.
Weyerhaeuser's interesting. It's the largest private owner of soft wood in the world. You can buy a company like Weyerhaeuser with a 3.2% yield at less than the cost that would take to reinvest in making trees. They're effectively in the ecology business of growing trees and harvesting them prudently.
They wouldn't necessarily be subject to the whims of the business cycle?
Well, they are subject, and in fact they have exposure to Asia. Much of the pulp is sold over in Asia, but if you can believe that the Asian problem is going to be a transitory problem, meaning that the 8% growth rate is not going to be 8%, it might be 4 to 5%, still a high growth rate in the world economy. So down the line, they'll be selling much paper to the Asian economy.
Financial industry for Chicago?
For Chicago is interesting. There'll be a merging with Bank One likely.
Right.
What we're talking about is the manifestation of a major regional banking operation that, if then put together with a national network down the line, will have efficiencies of scale, high quality, good businesses for Chicago. Credit card operation is almost second to none. Bank One is a very good operation, good management, just high quality companies, and in a consolidating industry, it looks well positioned.
Amount of time, but do you think we're in this volatility for a while?
I think we're into volatility for a while. That's the reason we have 41% stock market today. The paradox is that the reason that bonds are doing well, constrained prices, low inflation, is the reason that stock prices may be under pressure because of earnings looking forward.
Yep. Good to see you again, Roger. Thanks for joining us.
Thank you.
Roger Debard, Managing Director and Executive Vice President with Hotchkiss & Wiley, joining us in studio today. Stock Picking Friday. Don't forget about that tomorrow. We'll take your individual questions about stock.